Welcome, I'm Mark Todd from the NAB. Today I'm talking to Anthony Kirkham from Western Asset Management about markets. There's been some rally in all sorts of asset classes, and I'd like to get Anthony's view on where to put some money and what they're doing at Western Asset Management. First, for the viewers who don't know who Western Asset Management are, can you please give us a sense of who they are?
Yeah, Western Asset's a global fixed income firm. It's managing money for nearly 50 years in active fixed income space. So we're very broad, know the markets globally, have 9 offices to enable us to do that, and we're very much integrated, sharing information across those offices to make informed decisions.
That's a great idea to understand where markets are going, because I think a lot of people find it very hard to pick a market. US rallies a lot, what's happening in the rest of the world. What's your thoughts on markets in terms of this huge rally? Where do you see value at the moment?
Well, bonds have had an incredible rally over the last 12 months. I mean, the returns just an Australian core bond fund have been incredible, much higher than anyone would have expected, and partly due to this idea that global growth is slowing down, bond yields are obviously being compressed because people are clearly buying them and running to safety. So it has been certainly a challenged market in those terms. At the same time, we've had spurts of equity outperformance as well. So it's very confusing, I think, for investors. But clearly, you need to continue to invest, see the opportunities that volatility provides, and certainly that's what we're doing at Western Asset.
So since December, it's effectively as if the Fed blinked. We're lifting rates, no, we're not.
Yep.
And that was a structural shift. People are very concerned, and I know that when we talk to a lot of customers, they're worried about their term deposit rates, they're worried about their conservative bucket.
Yep.
As a conservative manager, where do you see value? Is it in short end? Is it long end? How do you think about explaining to people where you see value?
Well, as you highlighted, certainly the central banks are there to support markets. They want to continue this growth momentum. I think that's where Powell got quite scared in the Fed. They started to see some signs and clearly have moved to a more dovish stance. So, not dissimilar here in Australia. Obviously seeing unemployment rising a little bit. You've had the RBA obviously ease as a result. So there's certainly support there. And for us, that means that the credit market's going to continue to be supported. There's going to be a chase for yield, and therefore, we see that money will enter that sector. Right.
So just to clarify, for credit markets, you mean the cash earning, the premium paid by a corporate in the form of a bond. So you're saying, okay, I like that return that BHP, Telstra, somebody else might be paying.
That's correct. We're seeing that those investment grade securities are going to add the extra yield that people are looking for, and it's certainly going to be supported. The key thing though is that the fundamentals still look good. The profitability is still strong. Leverage is actually low from an historical standpoint, particularly in investment grade credit in Australia, and so we're overweighting that sector but focused on the short part of the yield curve. So it's somewhat defensive, I think, in positioning, but it does provide an extra running yield.
So go a little bit shorter because there's less risk.
Correct, yes.
What do you do then in terms of the bucket about going longer around the idea that if this isn't right, so if there is a weakness in the economy, I imagine the views are rates go lower. How do you then, if I have that view, how do I invest on that?
Yeah, and that's something at Western Asset we like to have. We like to have these diversified strategies, and one of those is actually have a long position in the 30-year part of the curve relative to the 10-year. So we're expecting that if things got really bad, we'd see the yield curve really flatten, and so we want to try and capture that as an offsetting risk to our position around credit.
I think it's a really good idea around investment grade versus non-investment grade, and how a lot of people don't really understand the diversity in that market.
Yes.
There's a whole range of different bonds in the bond market.
Yes, that's right. And in fact, in Australia, we've been very fortunate because we've had a lot of foreign issuers use our investment grade bond market to fund themselves. And so you've got real diversity there in local bonds that you can buy in Aussie dollars, so no currency risk, which I think is a real advantage.
Now, you've recently brought out an ETF.
Yes.
What is that ETF?
It's actually, the code is BNDS, so bonds without the O, if you want.
Bonds without the O,
yes,
okay, great.
It makes it easier for people to remember, and you can find it obviously in a listed part of the market, so it's easy to access and obviously get exposure that way.
So it's an ETF, and what does it invest in?
Yeah, so it invests in the broad Australian fixed income market, so everything from government, semi to credit. So you'll find those positions that we've been talking about, the overweight to credit, within that active fixed income fund.
And they are an active manager then?
It is an active manager, yeah.
Great. Look, I wish you all the best. I'm interested to hear how you're thinking about the markets, because I think it's hard to find value when all the money is going one way, but
Yes.
It's good to think there are still pockets of value.
There are, definitely.
Fantastic. That's Anthony Kirkham from Western Asset Management. I'm Mark Todd from the NAB. Hope you've enjoyed that video.